Price analysis: 2 halves: BTC, ETH, BNB, ADA, SOL, XRP, Luna, DOG, DOT, avax. Bitcoin rose above $39,000 on February 1st, but the sharp fall in the shares of PayPal may have resulted in aggressive selling by the short-term traders. However, in the long term, large investors seem to be viewing the decline as a buying opportunity. On-chain monitoring resource WhaleMap said that whales holding between 100 to 10,000 BTC have accumulated during the recent decline. Fidelity recently released a paper dubbed Bitcoin First, which highlights that Bitcoin is the most secure, decentralized form of asset and is unlikely to be overtaken by any of the altcoins as a monetary good. The report said that Bitcoin combines the scarcity and durability of gold with the ease of use, storage, and transportability of fiat. Irrespective of Bitcoin's volatility, its transaction volumes at the end of 2021 clocked an annual growth of nearly 100% over the past 5 years, according to a recent NYDIG report. This boosted Bitcoin's annual transaction volume to $3 trillion in 2021, surpassing popular credit card network American Express, which recorded $1.3 trillion worth of payments, and Discover, which had $0.5 trillion. Could the accumulation by the bulls indicate that a bottom may be around the corner? Let's study the charts of the top 10 cryptocurrencies to find out. Bitcoin's recovery reached the 20-day exponential moving average on February 1st, which is acting as a stiff resistance. This suggests that sentiment remains negative and traders are selling on rallies to the overhead resistance level. The bears will now try to pull the price below $36,632.61. If they succeed, the aggressive bulls, who had purchased the recent dip, may book profits, dragging the BTC/USDT pair below $35,000. The downsloping moving averages and the relative strength index in the negative territory indicate that bears have the edge. Contrary to this assumption, if the price rebounds off $36,632.61, it will suggest that bulls are buying on dip. They will then make another attempt to clear the overhead hurdle at $39,600. This is an important level to watch out for because if the pair sustains above this level, the next stop could be the 50-day simple moving average. The bulls will have to clear this hurdle to signal a possible end of the downtrend. Ether broke and closed above the breakdown level at $2,652 on January 31st. But the bulls could not clear the overhead hurdle at the 20-day EMA. This suggests that the bears are defending this level aggressively. If the price slips and sustains below $2,652, it will suggest that the bears are back in action. The ETH/USDT pair could then drop to $2,476 and later to the support line of the channel. The downtrend could resume on a break below $2,159. Conversely, if the price rebounds off the current level, it will suggest that bulls are buying on dip. The buyers will then again attempt to push and sustain the pair above the 20-day EMA. If they manage to do that, the pair could start its march toward the resistance line of the channel. Binance Coin rebounded off the support line of the channel on January 31st, indicating that bulls are buying on dip. However, the bulls could not push the price to the 20-day EMA. This indicates a lack of demand at higher levels. Both moving averages are sloping down and the RSI remains in the negative territory, indicating that bears have the upper hand. The sellers will now attempt to pull the price back below the support line of the channel. If they succeed, the BNB/USDT pair could drop to the strong support zone at $330 to $320. Alternatively, if the price rebounds off the current level and rises above the 20-day EMA, it will indicate that the selling pressure could be reducing. Cardano continues to struggle to rebound off the strong support at $1. This indicates a lack of urgency among traders to accumulate at the current level. If the bulls fail to push and sustain the price above the moving averages within the next few days, the possibility of a break below $1 may increase. If that happens, the ADA/USDT pair could resume its downtrend. The first support on the downside is 80 cents. If this level cracks, the decline may extend to the support line of the channel. Conversely, a break and close above the 50-day SMA could result in a retest of the resistance line of the channel. Solana turned up on January 31st and broke above the overhead resistance at $104.82 on February 1st. The price reached the 20-day EMA today, which is acting as a strong resistance. The bears are attempting to pull the price below $104.82. If they succeed, it will suggest that bears continue to sell aggressively at higher levels. The SOL/USDT pair could then retest the recent low at $80.83. Conversely, if the price rebounds off the current level and rises above $116, it will suggest that bulls are making a comeback. The pair could then attempt a rally to $130 and later to the resistance line of the channel. Ripple remains stuck between 54 cents and 65 cents. The attempt by the bulls to start a relief rally could not even challenge the overhead resistance at 65 cents. This indicates a lack of conviction among the bulls to buy at higher levels. The downsloping moving averages and the RSI near the oversold territory indicate that bears are in command. If the price breaks below 58 cents, the XRP/USDT pair could drop to the strong support at 54 cents. A break and close below this level could pull the pair to the psychological support at 50 cents. This negative view will invalidate in the short term if the price turns up from the current level and breaks above the 20-day EMA. Terra's Luna token bounced off the support line of the descending channel on January 31st, but made a doji candlestick pattern on February 1st. This indicates that demand dried up at higher levels. The uncertainty of the doji candlestick pattern has resolved to the downside, and the bears will now try to pull the price to the strong support at $37.50. The downsloping 20-day EMA and the RSI in the negative zone indicate that bears are in command. If the price turns up from the current level and breaks above $54.20, it will suggest that bulls are accumulating on dip. The Luna/USDT pair could then reach the 20-day EMA, which may act as a barrier. A break and close above this resistance will be the first indication that the bears may be losing their grip. Related, why did WazirX token jump 30% after India announced its big crypto tax? Dogecoin remains stuck between 13 cents and 15 cents for the past few days. After failing to break below the support, the price rose to the 20-day EMA, which is acting as a stiff resistance. The price has turned down from the 20-day EMA, and the bears will again attempt to sink and sustain the Doge/USDT pair below 13 cents. The downsloping moving averages and the RSI in the negative territory indicate that the path of least resistance is to the downside. If the price slips and sustains below 13 cents, the next stop could be 10 cents. Conversely, if the price rebounds off 13 cents, the pair could extend its range-bound action for a few more days. The bulls will have to push and sustain the price above the 50-day SMA to signal a possible change in trend. The failure of the bears to pull Polkadot below the strong support at $16.81 in the past few days could have attracted buying from the aggressive bull. This started a relief rally, which reached the 20-day EMA. The long wick on today's candlestick indicates that bears are aggressively defending the 20-day EMA. The sellers will now make one more attempt to sink and sustain the price below the critical support at $16.81. If that happens, the downtrend could resume and the DOTA/USDT pair may drop to the next important support at $10.37. Contrary to this assumption, if the price turns up from the current level and breaks above the 20-day EMA, the pair could rise to the 50-day SMA. Avalanche's relief rally stalled near the breakdown level at $75.50, indicating that the trend remains down and bears are trying to assert their dominance. If bears pull the price below $64, the AVAX/USDT pair could gradually slide toward the critical support at $51.04. This level could again act as a strong support, and a rebound off it may result in a range-bound action for a few days. On the other hand, if the price turns up from the current level, the bulls will make one more attempt to push the price above the overhead resistance at $75.50. If they manage to do that, the pair could rally toward the downtrend line of the descending triangle. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research when making a decision. Market data is provided by HitBTC Exchange.